Thank you so much for joining us here on a Crop Progress Tuesday, as we like to call it. I'm Marlon Bowling with you, keeping an eye on your ag commodity trade and also bringing in some expert help to help analyze things, because things are kind of moving a little fast today and not necessarily to the upside either. Let's go visit with Brian Hoops. Brian happens to be the president of Midwest Market Solutions, and he's based in Springfield, Missouri. He joins us right now. And Brian, as we look at the grain trade, we can kind of walk through these. By far, the most weakness seems to be in this soybean market today, right at the time of year when everybody thought, well, this is their critical pod filling time. That's when they're most at risk. And boy, apparently the trade thinks there is no risk right now.
Well, what we're seeing is forecasts that have changed from a hot and dry pattern to much cooler, much wetter as we go into this pod filling stage, like you said, and that is going to be bearish for soybean prices. Rains in the last half of July and into early August are usually bearish, and we've had some rains. We've got forecasts for more rains, and you can see the trade is down sharply. And I know we've talked in previous weeks that there is very little incentive to be long this time of the year from a speculative standpoint. You know, I could count on my one hand probably times in the last 25 or 30 years where it's paid to be long after the 4th of July. This year does not look to be one of them. The funds came into this week still holding big long positions in the corn, the soybeans, and the wheat, and that's who is doing the majority of the selling today, is these fund traders trying to get out of their long positions.
We're looking at a November chart on soybeans right now, and you know, even though it has had a steep sell-off here recently, boy, if you go back a few weeks there, I mean, it still has a long way to go to get back to the lows from earlier this year.
Yeah, you know, the lows that were charted were not that long ago, just a few weeks ago. And so you can look at some retracements on the charts. We're right at about the 50% correction here. We just went below it, but the key support area I think is going to be at the 960 for November beans. That's a 62% correction. There's also a big gap on the charts that would be filled, and some other technical support at around 958. So I do look for the soybean market eventually to trade down there. I do hope that we get some opportunities, you know, some weather scare or something that'll give us a rally back above the 1005 to 1010 area. That would represent another opportunity, I think, for producers to try and make some sales, because we are looking at, I think, a potential big crop in the soybean this year, and big supplies that could pressure prices into back to the low $9 mark by the time we start the early stages of harvest. So I'm hopeful we get some sort of a rally. Producers can lay off some of their risk. It's a little bit different than the corn market, because we've gone through pollination there. What damage is done or what yields have been occurred are already set. It's a soybean crop that really could see a bump in yields if we get the beneficial weather that is being forecasted.
Well, let's look at corn prices right now. And on the corn board in Chicago, September is still down 7 3/4. 363 is our current trade. December down 7 3/4 at 377. So both of those just 2 ticks from their low of the day. On that soybean trade that we were talking about, over 30 cents to the downside. We have August down 31 3/4. Of course, that's in delivery now. September down 31 1/2. And November down 32 at 975 1/4. The soybean market, if you look at the board, the first 5 contract months, all the way through March, and in fact, I looked a little bit ago, I think all the way through July, are now under $10. What a switch in one day. On the wheat trade, let's go to Chicago. Let's look at September. We're down 1 3/4 at 472 3/4. Of course, the wheat market has been weaker lately. Kansas City wheat, we have September currently 1 3/4 lower at 473. On the Minneapolis market, on the spring wheat trade, September getting pounded down 9 1/4 cents at 722 today. In the cotton market, can it divorce itself from the grains? The answer is a little bit, yeah. December, the new crop month, now up 11 points at 68.97 per pound. It has been as high as 69.33. We'll come back in a moment, and we'll talk more with Brian Hoops about the markets when we come back. We are talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri, and he's talking with us live and direct here from his home office. And Brian, I wanted to visit with you. We'll talk about livestock here in just a moment. I wanted to visit with you about the financial markets here today for a moment. New record highs again in the Dow this morning. It went surging ahead. Let's take a look at the dollar and also that crude oil market. They could have an impact here on the ag trade as well. The dollar has really been getting weak here over the past week or so, but right now it's firming up a little bit this morning. So it seems to have stabilized. September U.S. dollar index futures now at 92.890. That's now up 170 points on the day. Meanwhile, on the crude oil market, which had been over $50 a barrel, now we're seeing a steep drop all of a sudden. September now down $1.19 at 48.98 per barrel, so a big decline there. It did get up above 50 bucks, and it seemed like maybe it achieved its goals, and now it's backing off here, Brian.
Yeah, we were talking about how these markets can, do the mind of their own and do whatever they want. Normally, we will kind of follow what the crude oil does, and it has rallied over $50 a barrel, up sharply in the last several weeks, and the grain markets haven't really followed it. The U.S. dollar has worked lower into some multi-year support, and that's usually bullish for the grains, and they have kind of ignored that support and have worked lower. So, yeah, we are really trading on our own and just trading off of weather right now and ignoring some of these outside markets like crude oil and the U.S. dollar.
Let's take a stroll through our livestock trade here. We'll go to live cattle first, and let's go visit each one of the boards. We have October live cattle now down 27 at 111.68. December down 17, so minor losses here. On the feeder cattle side of the equation, right now you have your September up 55 at 147.20, and now you have October 38 higher at 146.60. Lean hog trade, on the other hand, we look over there, down $1.42 on the October contract, 64.60, and I note that the nearby August now under 80 bucks at 79.75. Let's take a real quick look here at the livestock trade. How much trouble is this hog market in today?
Well, you look at the structure of that market. December's at 59. That's a $20 discount to where the August is. It's about a $30 discount to where the current cash markets are. The December futures already anticipating we're going to have big supplies coming into this third and fourth quarter, which I do expect that we're going to, but it's already holding a steep discount in anticipation of that. It's going to be like this cattle market was this spring and into the summer months, where June was holding a huge discount to where the April was. It doesn't represent really any hedging opportunities for the producers, so they are better off using some sort of an option strategy to protect the downside risk here, but allow upside potential if those futures find a way to bounce and start to rally, and then lock in the futures contracts at a later date.
And right now, the October on out, all the deferred months are all well over $1 lower on the board all the way through April of next year. So very concerning, especially when you look at a technical chart. Brian, thanks for all the information today. Great to visit with you. I appreciate it a lot, and look forward to talking with you again here real soon. All right?
You bet. Thanks again. Talk to you soon.
Brian Hoops, president of Midwest Market Solutions in Springfield, Missouri.
All right.
Down day there. Boy, big down day and a lot of stuff today.
It's a Crop Progress Tuesday.
It is.
We'll see what happens from here on out.
Week, yeah.
Okay. Thank you. Markets editor Marlon Bowling.